All right. Welcome back, everyone. Welcome back. It's been a week, but I'm feeling a lot better. I can finally speak. Hey, what's up, guys? Welcome, welcome. Hello, hello. Nice to see you guys. Oh, 3 likes. Awesome, awesome. Let's get that to 10. Let's try to get that to 10 tonight. Alright, so it seems like people are getting their notifications that I am live. So we will slowly begin, if you guys don't mind. Hopefully you guys are all ready to listen to what I have to say. Of course, hopefully this live stream is informational and most importantly, applicable for the next few trading days, weeks, or even months. Okay, so as you guys can see in the title, hey, what's up, guys? Hello, hello. What's up, what's up? We are back. We are officially back. I am not sick anymore. Okay, so as the title says, okay, SPY 500 and then 460. What do I mean by that? Well, first of all, you guys should always take a look at the description box below. And this is what we said. Okay, just for all the people who didn't read it, I said as we head into the OPEX for the month of February, you guys should be positioned for some large moves as volatility expands. We have been positioned well for some time now, so I will discuss what you guys should be watching from this point forward. I will also discuss some earnings that occurred after hours today, like SNAP and ENPH. Right? So, and most importantly, let's have fun. All right, let's have fun. So, first of all, let's talk about the markets. Okay, so what do I mean by SPY 500 and then 460? Well, there's currently a volume wall sitting at $500. Right? So, it's either going to be we never reach 500 or we reach 500 and we see some sort of a blow off the top move. So, to me, that kind of sounds like, from what I'm seeing now, is that the market wants to wants to hit that all-time high whole number level at $500, right? And people were saying back in October lows that this is going to be impossible, right? This is not possible, right? There's no way at this point in time that SPY would get up to 500. It's most likely going to crash and we're going to move further down after October. But guess what happened? All right, we officially called out October lows, late October lows from the transition from October to November that we'll be seeing a market bounce last year. And I said this in late July to early August of last year, right? I told everyone to expect that. And that's exactly what we got on October 27th. I will always remember this day, right? October 27th, 2023 was the official bounce, and that was also officially my exact timeline from late October to early November, that transition in between those 2 months. And again, I said that in late July and early August of 2023. I repeatedly said that for everyone to remember. Okay. Hey, 4 likes. Awesome. Let's get that to 5, 6, 7. Hey, Minor, what's up? So as I was saying, the market has been an absolute tear. right? So again, this $500 whole number level. Why do I think there's a possibility for us to head up into that whole number level and eventually, kind of have a quote unquote blow off the top or a simple reversal at that $500 level? And obviously, I'm not guaranteeing that we're going to see an immediate test at 500.00, right, down to the cents, and then we go down, right? We can most likely see a little pop over 500, maybe even up to like 502, 503, right? And then we can start moving down, right? Nothing's ever perfect. So keep that in mind. Now, today, so far on the daily time frame, we've had back-to-back inside day candlesticks. Okay, so what does that tell us? Well, so far, the market is digesting the last 3 trading day candlesticks here, right? Or specifically the last Thursdays and last Fridays candlestick, right? So if you guys remember, Wednesday was kind of the move down from FOMC rate decision and the Jerome Powell news conference. The market got spooked when Jerome Powell said they weren't seeing or looking for any type of rate cuts in the near-term future, which means the probability of any type of rate cut, which is currently at highs right now for interest rates or the federal funds rate, or even the target range, are still staying at highs. That means that come March, we won't be seeing any type of a rate cut. And if you guys remember, Jerome Powell on 60 Minutes, if you guys watched that section, or that interview, he said that they're more likely going to be cutting interest rates in the middle of this year, right? In the middle of this year, and that's going to be closer to elections, right? November election, the official presidential elections. And it's most likely going to be against or between Trump and Biden. That's what the market has been saying. But specifically, I know you guys don't like to hear this, but for most of the traders out there who are most likely leaning slightly towards the right and are more leaning towards Trump, the market has been telling us that Biden is going to win the re-election. All right, so that's just facts, not just the data. That's just what the market has been telling us. All right, but again, there can be an upset by Trump. Who knows? Right? Who knows? Maybe that silent majority may come out. But hey, we're not here to talk about politics. But if you guys have any questions on that, please let me know. I know quite a lot about that. So DM me on Instagram or DM me on Twitter or whatever it may be. But it's going to be a pretty interesting election year. So SPY again, we've been seeing this move up. Kind of the market just completely ignoring what Jerome Powell said. But as I've told my members last Friday, that this move up was slightly suspicious. And the reason why I say that is that the market internals, the breadth, was decreasing. We've actually had on Friday more names that ended up closing red, negative, okay, compared to the names that closed green or positive. And the market breadth continued to weaken throughout Friday's performance and into Monday, yesterday. So, hey Joel, what's up? Market Trends email is legit. Thanks for what you do, man. Of course. Hopefully you enjoyed that, and hopefully you guys can spread the word out there, right, about Charts Focus 1 here, and really get things rolling here for us. It's always better to see a lot more people coming into the community, joining the newsletters, and really just seeing an influx of more ideas from all different types of traders from all walks of life, right? So if you guys have been enjoying any type of content that I've been putting out on any platform, it'll be really nice if you guys can just do some good word of mouth and putting the good word out there, right? Okay, so as I was saying, the market internals, the breadth was really starting to, it wasn't looking good, right? There's a divergence in the market internals right now. It's making lower lows and lower highs. And if you guys are a member, you guys should know what I mean by that. And you guys should have read that on the private Sunday newsletter, the CFO Streaming Watch newsletter. So make sure you guys read that. If you guys are watching this right now, if any of my members are watching, or if any of my students are watching at that. So, today, the market internals actually improved as we saw small caps and mid caps kind of leading the way up higher, while the overall leaders like the Mag 7, the Magnificent 7 stocks, was actually down on the day. But obviously, the market recovered on intraday today and decided to close up at 0.29%, or about 1.43 points higher compared to yesterday's close. So that's the reason why we've kind of ended up with 2 inside day candlesticks and on much lower volume compared to the last half of last week. And that's important to note because that means we're tightening up for a potential larger move come tomorrow, maybe Thursday or even Friday, right? Who knows? We might even stay in a tighter range again tomorrow. But again, you can't get tighter than this, right? So we're definitely going to see some sort of a big move either to the upside or to the downside. Now, personally for me, for members, I have told everyone that I'm going to be leaning more towards the upside. And the reason for that is, well, again, there is that seasonal trend that we can potentially move up higher before or into February's OPEX, which is on February 16th. I'm still stuck on the month of January. So again, January is a short month, very, very short month, only 29 calendar days, right? So SPY, it'll be really nice to see a quick move up to 500, right? And possibly even pop up to around 500, over 500, and then move lower. So, you know, I think there's a chance that we can be seeing that. We have put on a trade right before close today that could potentially help us capitalize on that potential opportunity. So for any of the members who are watching the live stream right now, make sure you guys check that out. But again, read the newsletter from Sunday night. It's crucial that you guys watch it, or read and watch the technical analysis video. Okay, I was getting ahead of myself there. But finish my drink. So now, what could happen after we see that official touch at 500? Well, here's the thing. Okay, if you take a look at the RSI on the daily time frame, you see some sort of a weird divergence. And what we are seeing here is the typical hidden bearish RSI divergence. That is the full name. Okay, hidden bearish RSI divergence, or you can kind of flip the words around and say bearish hidden RSI. It doesn't matter, as long as you know what I'm saying, right? So what we're seeing here is lower highs on the RSI with lower lows. So lower highs are accompanied by lower lows on the RSI, while simultaneously the price on the S&P 500 itself is making higher highs and higher lows. In fact, we're making a very nice ascending channel. And if you guys don't know what that is, an ascending channel is a inherently bearish chart pattern, right? So if you couple that with this indicator, this lagging indicator called RSI, which is currently showing us a hidden bearish RSI divergence, there is a reason to start getting very, very cautious about a potential reversal to the downside. Okay, and that's the reason why my members and I and all my students have been positioned for a potential move to the downside in the next few weeks. So now I have my timeline about 2 to 1 weeks ago, 1 to 2 weeks ago, I would say. 1 to 2 weeks ago, that in about the next 8 weeks, the trading environment is going to become very, very hard. We might see an expansion of volatility, expansion of vol, or the VIX, right, the volatility index of the S&P 500. And that can make trading conditions very, very hard for swing traders, or even just day traders as well. But I know there are some day traders who love high volatile market conditions. But overall, volatility is never good for anyone. So, you know, if you start to see the expansion of vol, if you start to see this hidden bearish divergence on the RSI working its way into the actual price action and trend, we will see the S&P 500 moving lower. Now, for the people who have read the market trends email, that was sent out tonight. It's, well, you guys should know. I put in a lot of details on the more reasons as to why we should believe that the market can see seasonal weakness into mid-February to late February and potentially set up for a larger official pivot come March. And obviously I told you guys in that email as well that I'll be going a lot more into depth and divulge more into why that is for March. So that will be sent at the beginning of March. All right. So if you guys aren't opted in to this free monthly email, again, you won't be inundated with emails. You're just gonna get one email every single month. So that's only 12 emails for 12 months. Right? So again, if you guys are scared that I'm gonna be spamming you guys with emails, don't be. You're only gonna be getting one email per month, which is 12 emails for 12 months. Right? So if you guys have not opted into that free newsletter yet, make sure you guys head over to my Instagram profile and click on my story where you guys can fill in your full name and then your email address. And if you guys are wondering why I asked for a full name, well, there tends to be overlapping of names. Sometimes some people have the same names, same first name and same last name. And again, I have hundreds of email addresses. So, of people who are reading the market trends, right? There are hundreds of people who have opted in to this newsletter. So, I don't want to have, same names of email addresses. So I want to make sure that, people are getting their newsletters correctly as well. And so hopefully you guys are able to head over to my Instagram profile, clicking on my story before it goes away and opting into the newsletter. Okay, so again, I really explained everything into depth of what I can be seeing and why I could be seeing a potential reversal in the overall market. So overall, just technically, the main thing is that the RSI is showing us this hidden bearish divergence, along with the fact that the market is getting a bit overextended as it continues to stick around overbought levels. Now, obviously, during a bull market, you will want to see overbought bullish conditions, all right? Because again, RSI being overbought does not mean we're going to be seeing an immediate reversal. Generally, by definition, it means that buyers are strong. That's it. Right, that's simply it. Right, so for the RSI again, as we continue to stick to the 60s and over 70s, we will continue to see great strength, but the volume is the telltale sign, right? The telltale sign, right? I kind of botched that word, but I think I botched it again, to be honest. Telltale sign. I'm going crazy, but I've been reading too much data and too much information for the past couple of days here, so don't mind that. But the volume has been decreasing every single trading day, and eventually the average volume will also flatten out like it's doing now and start curling down, and that's when things will be problematic for the bulls, right? Especially for the FOMO people. The FOMO crowd, as they say, who have been on the sidelines for most of this run up since October lows. So, what should that tell you? Right? So these FOMO buyers are just contributing to the market run up so far, but there are less and less people contributing to this run up. All right. So again, we can have one more final push up higher until we hit this magical psychological whole number level at 500. Who knows? We might even pop over 500. Okay, 502, 500. I don't know, right? I wouldn't know at this point. But there is that ceiling at 500, and again, we can either hit it as we head into next week, into especially into February's OPEX. And then we can see that large rejection to the downside, right? But again, this volume worries me, as the volume has been dropping off for the past three trading days, including today. So This is definitely something you guys should be watching out for. Okay, so make sure you guys are thinking about that, and definitely start to really think about how much risk appetite that you guys should be having, or how much risk that you're willing to engage into the market. But now, if we do see a move down, can we see a possible retest of 460? That's definitely possible, especially if we're looking at a potential textbook correction, right? So if I go from today's close at 493.98 or somewhere around there roughly, right? And if I go all the way down to 460, what we have here is about a 7% move down. So if you guys remember, a textbook correction is usually ranging from 5 to 10%, or usually the maximum 10%, right? And anything further than that, or maybe around 20%, that's when we officially are looking at a market crunch, right? And obviously 20% plus. So in this case, if we do see a retest of 460, that will just be a very, very typical market correction. I wouldn't be too worried about that. So, this 460 is really not out of reach. We have been running up, straight up, and that wouldn't even be, let's see, that wouldn't even be, if I can do this right. Sometimes TradingView likes to screw around with me, so let me just use a ruler here instead of using my keyboard. All right. So from October's lows, we've been moving up over almost 21%. So a 7% pullback is going to be not even noticeable in the long run, right? So 460, definitely keep this in mind. But this is kind of my ideal target for a correction. So more of a realistic target for a correction will most likely going to be somewhere between 470 to 466. Okay, so somewhere around this area, right? So 470 to around 466, right? Somewhere around here. So 470 to around 466. That's exactly what I want to be seeing, right? So, and the reason why I say that is, well, the 50 SMA is rapidly catching up. It's very, very rapidly catching up on the daily time frame. So if you do come back down, we're gonna see some really good, well, not even just some, we're gonna be seeing a lot of good support coming in at this daily 50 SMA as people decide to, dollar cost average, longer term investors, or people who are just really trying to have a swing trade or a position trade on SPY as it retests. It's very, very crucial. 50 SMA on the daily time frame. And so, if we do decide to break below that, if the market textbook correction deepens, then I would expect the daily 50 SMA to break, the price to lose the daily 50 SMA and come back down to retest this little demand area between 466 to 470. Okay, so this kind of quote unquote little 4-point range. Right, that's exactly what I want to be seeing. Okay, so realistically, 466 to 470 is kind of my target range for any type of a correction to the downside. And if you guys are wondering what the percentage move down is, okay, if I go down to like 466, right? So that's about 5.50%, right? And so that falls in within the 5 to 10% textbook correction range. Okay, so again, the daily 50 SMA retest, the first retest since this large move up higher, will be the telltale sign. All right, I still think I'm saying that wrong, so whatever, double whatever right there. All right, so SPY 500 and then 460. That will be my ideal target for potential correction all the way up into March. All right, especially if we do see a turnover in the market momentum, and potentially we can be seeing that based on volume and based on my RSI and based on the other indicators that I like to use, but I won't be showing here because that is kind of my sauce that I like to share with my private students. Okay, so SPY, definitely keep this in mind. I'm still staying relatively bullish. The futures, the overnight futures, currently pushed past today's highs at 4978.25, and it's currently sitting at a 0.01% gain on the day so far. Now there's a long night ahead of us, so don't sweat it if you guys are short or if you guys are long. All right, we still have a lot of time before the market open tomorrow. Okay, so that is it for the market summary. Oh, Miner, my God, you have a whole list here. Okay, so Miner, I'm gonna like usual, I'm gonna go over only a few here that I like. So I'm gonna choose Snap because I need to talk about it for earnings and ENPH as well. So I'm gonna talk about Snap, ENPH, Tesla, Snow, Lyft, and then Shop. Okay, I'm gonna choose those names. All right, so we're hitting that 30-minute mark very, very soon. I believe we did hit it. Oh, 25 minutes. Okay, so 5 more minutes. Okay, so I'm gonna need to shorten your list there, Miner. And also, it's important to be only looking at a couple of names too. So hopefully you don't forget that, Miner. So Snap. Okay, so it wasn't really too bad of an earnings. It wasn't a double beat, right? They beat on earnings, but they didn't beat on revenue by a slight margin. It's only a slight difference here between the expected and the actual number. But hey, you know what? Snapchat, whenever it has earnings, it always decides to have a bad reaction. And after hours, it is down astronomically. It's nearly completely wiped out the gains since mid-November, if I believe. Yeah, so from here. So Snap, I believe, went down to $12 and eventually broke slightly below it, around like 11.93ish, if I remember the last price. But it seems like it really wants to retest the daily 200 SMA tomorrow. There's a chance that we can even come back down and fill in this gap up that we didn't completely fill on this candlestick right here on November 17th. So tomorrow there might be a day trade opportunity right at market open where we see the price initially moving down as more and more people sell for the people who couldn't get out after hours, people who are either gambling overnight and were long, thinking that Snap is going to go up to like $20, like FinTwit was really just harping on there. They're really looking for that $20. And obviously, I told my members and other members were saying that it looked too easy, right? It looks too good to be true, and that's exactly what happened, right? The institution said, forget about your calls, we're gonna go down, right? And that's exactly what happened with Snap. So Snap always tends to gap down on earnings. For the past couple of earnings reports, I think the past 3 to 4 earnings reports. Yeah, I think around 3 if you're not including today's. And they tend to kind of base after a short while or for a long time, and then it starts to step higher, right? It starts to climb up higher, and it usually does that until the next quarterly earnings report. All right, so for Snapchat, definitely tomorrow, if we do see a retest on the daily 200 SMA, which closed at $11.63, there is a chance that we can see a bounce, or we can see a full gap fill between, this gap that wasn't filled between November 13th through November 14th. All right, so if you guys are really wanting to see some type of a trade tomorrow, I would say wait until this binary event is kind of priced in. You really don't want to be seen with your pants caught down. It's kind of the saying there. So for Snapchat, definitely take a look at the daily 200. And yeah, that's it. And then now I want to talk about ENPH. And the reason for that is that I think solar stocks are finally bottoming out because it had horrible earnings report, a double miss, and the stock was moving pretty rapidly to the upside. solar stocks have been battered to crap, right? Since 2023, right? Or since 2022, I believe. If I go on the monthly time frame here, since late 2022. So I think it's finally time for these solar stocks to have some sort of grip here to try to move back to the upside. And the reason why I'm saying that is that we are currently in SEDG, vertical debit call spreads. If you guys don't know what that is, please DM me. I will tell you guys what that is. But SEDG it was moving rapidly to the upside. I believe it closed around like $73. So our spreads are definitely going to be up tomorrow. But I'm waiting on a much bigger and a much longer move to the upside, especially as the market continues to become more and more optimistic as the Federal Reserve becomes more and more confident in the fact that they're going to be doing their first rate cut right before elections. Right, so that can be that could be in September, right? If I remember the FOMC schedule, obviously I'm not part of the Federal Reserve, so I really wouldn't know the entire schedule here. So basically I'm correct there. So somewhere around, I would say, July to September could be their potential first rate cut. But if you guys remember, the market tends to move based on the perception of what the future can be. So that's essentially what I'm banking on here and what I'm hoping on to happen as the market decides to move up higher in anticipation of a more comfortable and more confident Federal Reserve on when to do their first rate cut for interest rates, the Federal Reserve fund rate, right? The federal funds rate. So, or the benchmark rate, right? I mean, it's the same synonymous words or statements. You guys should understand that. So, SDG, I really want to see this moving back up. Hopefully on earnings as well, it does well. Specifically the earnings reaction does well. I don't really care what the earnings report is, because ENPH had a completely really crappy report, but it seems like we're at this pivotal point and across all solar names that any negative news is being treated as positive news for the share price, because the share price has been beaten down enough for all solar stocks. Okay. All right, so Tesla. Ooh, Tesla. So this one is pretty interesting because I think this one is ready for a move up higher. And if you guys remember, I strictly told everyone, I've been repeating this, that Tesla might just kind of divulge. What would be the correct word here? They might. Tesla might just diverge away from Mag 7. And what I mean by that is that Tesla's price action has been completely opposite of what the other magnificent mega cap stocks have been doing. Right? It's been, if I'm talking about percentages here, from the most recent pivot high point, right? This thing's down over 30%. It was down around like 35% at one point, I believe, or like 33%. So Tesla can definitely move inversely compared to the other Mag 7 stocks or that entire group. And I've been telling my private members and students that there's a chance that we can be seeing something like this, right? Because, Tesla, first of all, has been making a very nice, decent channel and promptly really just sticking to the trend lines here. So there's a chance that we can be seeing something like this on Tesla, right? So another kind of a 20 to 25% move back up to retest this descending resistance trend line, since currently we are sticking close by to this descending support trend line. So overall, these two macro trend lines create what we call a descending channel, which is, as you guys know, an inherently bullish chart pattern. So Tesla, longer term, definitely going to be a winner for sure. I can see Tesla in the 300s in the next 2 to 3 years, based on fundamental and technical analysis. I can go a lot deeper into that, but just for the sake of the live stream, I'll keep it at that. Fundamental, especially fundamental wise. But Tesla, in the shorter to mid-term range or perspective, we can be seeing something like this. At least, at the minimum, a retest at 200 will be nice in the next couple of weeks. Right? I don't think it's gonna happen this week. Maybe next week as we head into February's OPEX, as the market decides, or maybe to move up to the $500 whole number level. Right? That'll be an all-time high test of that psychological whole number level. Okay. All right, minor. And then next we have snow. So snow, I really like this one too. So snow obviously is a bit extended. If you take a look at the RSI on the daily time frame, it's relatively strong, right? It has good RS. But on the weekly time frame, we're just now moving off from overbought conditions at 70.52. That was the pivot high point for the relative strength index. And this week's digestion of last week's breakout is looking pretty good. Now, do I think snow can potentially have more room to run? Yes, but it needs a lot more sideways. I do like the fact, however, that we've been pulling back and digesting this entire breakout from last week, which is mostly in part thanks to last Friday's move alone. I love the fact that the volume has been very, very low. Whenever you see very low volume on any pullback, that's a good sign that whatever trend that's currently occurring is going to be intact. And right now, what is the trend, guys, for snow? To the upside. To the upside, right? So that's something to take note of for snow. Right now, it seems like 220 is that ceiling, that resistance. We're seeing some supply hitting 220. So once we're able to break over 220, we should be officially be able to see another break to the upside and potentially reach this huge supply area that we're currently in. And some levels here around, I would say around 230.50 to maybe even around, let's say, 242. I'm just eyeballing it here for now. But 230.50, 242, right? That could be a very ideal target or maybe even realistic, especially with that 230.50 if we do break over 220 ceiling here. So, hey, snow definitely a relatively strong name, something to be keeping on your RS watch list, especially if the market decides to turn over and roll over towards the more bearish momentum. Joel, you said, hey, for Tesla, real quick, do you see it going lower, or do you think it's bottoming out, trying to catch the bottom? Good question. So this is my personal opinion, so I'm actually going to be a little bit biased here. This is exactly what I'm going to be thinking for Tesla, right here. This price path structure that I've just drawn, Joel, right here. So I don't care how far we go up. I don't care if we do this right now, right? This exact structure, because that's exactly what we've been doing. We've been conforming to these trend lines. All I want to see is a bounce, right? So all I want to see is an actual retest of 200, and then longer term, like I said, 300, right? At least minimum 300. This golden line, this whole number psychological level, right? So more the mid to longer term, I want to see Tesla to 300, but that could be a while. So if you're planning on any options trades, you want to choose leaps that are minimum, I would say. In order to protect your capital from time decay, you want to be choosing at least 2026 expirations. Okay, so longer term, 2026, but if you can't afford those, 2025 December, at least the later half of 2025. Joel, you said mid-March. I'll be very well. I don't want to be conservative in my targets here. If Tesla decides to exactly do what I've drawn here, if it decides to kind of move away from the overall Max 7 Group's price action if the market action decides to move lower. The market trends, overall market trends, excuse me, so like NASDAQ or at the S&P 500, but Tesla near March or mid-March, I'll be a bit liberal with my target. I would say at least the 220s. I can't really tell you much because I have no confirmation, no data right now. I mean, this is not really telling me much. Just the fact that we're holding 180. I mean, I told everyone about this 180 2 weeks ago, right? So, hey, hopefully you guys haven't forgot that, right? So, meaning should buy leave smart. You definitely can. I mean, you definitely won't be seeing too much movement in your premium for those leaps, but those leaps are gonna be expensive, man. So I know that for sure for Tesla. You're gonna have to go really far at the money, but I would say try to stay within the $300 range for the strike. But I mean, if you can't afford the 226, right? Excuse me, the 2026 expiring contracts, go ahead. But I would say for me personally, I will wait a little bit more, but I am seeing more increasing volume every single trading day around this 180 level. This level has been holding. That's a great positive sign as we stick to this macro descending support trend line for Tesla. So, the choice is yours. The ball is in your court there, brother. Okay. All right, so minor. Hopefully that was useful and for Tesla as well and Snow. I'm gonna do one more, or actually two more. Lyft and Shop. So Lyft, minor. I know you are probably reading my messages for Lyft. So definitely Lyft is going to be influenced by Uber's earnings results tomorrow morning. I believe it's tomorrow morning. If I don't know if they have updated that or not on TradingView, but I'm pretty sure it's tomorrow morning. But if you were to completely forget or completely ignore Uber's binary event, this catalyst, this earnings catalyst, Lyft looks pretty interesting here for a potential run-up, a potential reversal to the upside, because this one has been really just tightly consolidating right at this 12.50 mid-range area here, right underneath the daily 50 SMA as well. And now today we attempted to have a nice short squeeze run. I mean, just take a look at the volume, right? This is nearly double the average volume on the day, on the daily time frame, right? The average is 9.68 million, while today's volume alone was 16.50 million. Right, that's almost double the average volume. So today's volume will definitely add on to the daily average volume. So for Lyft, there is still, I believe, a good amount of short interest percentage there, the SI percentage. Let me actually look that up. I actually want to look up that stat right now. Let me see. Let me move my mic here, guys. Ooh, 48.9 million shares, so that's about... Okay, so about 14.02% short interest percentage float. That's not too bad. It's also not too high, but that should provide enough of a momentum for the price to kind of short squeeze higher into tomorrow. Now, what was also interesting today, I forgot to mention earlier when I was talking about the market review, we saw a lot of the crappy companies short squeezing. So when we see really bad fundamental and just overall bad performing stocks starting to short squeeze to the upside, that's a little sign that the market is in trouble, right? Yes, the market internals they are improving after today's price action, but we're starting to see a lot of those the crappy companies seeing increase in their share prices today. Kind of a short squeeze like move, like today on Lyft, or even Carvana, for example, right? Ended at highs today with a lot of volume, almost nearly double the average volume today on the daily time frame, right? So this one I missed over 46 today, but hey, I'm completely fine with that. I have many other great positions that are working out perfectly so far, but again, Lyft, this one should continue to move up higher tomorrow after this breakout from this descending resistance trend line. So it made a nice tiny this micro wedge. It could be considered a bear flag, but if today's price action holds and we see another breakout tomorrow over 13.50, which is going to be over today's highs, we should be able to break over and stay over the daily 50 SMA, since we tried to do that today, but unfortunately we closed below the daily 50, right? So that is still telling us that the sellers are still very much present, but if we're able to close over the daily 50, it's going to be the official confirmation for long-term and short-term buyers to come back in to ride the wave up higher. But again, I'm all saying this based on that Uber won't be reporting tomorrow. All right, but they are reporting, so there's that. Okay, so the Uber can completely change whatever I just told you guys on Lyft today. Okay, so last but not least, let's take a look at SHOP. SHOP. So this one is also interesting. So I have been personally looking for a short on this one because, first of all, I mean, come on now. If you guys don't know this basic trading chart pattern, you guys need to get my book. You guys absolutely need to get my book, The Beginner's Trading Guide. It is a full comprehensive guide to really just focus you on where you need to go when you first begin trading. Okay, so for Shopify here, we're seeing a nice rising wedge, which is inherently a bearish chart pattern, and you do not want to be involved in this when it decides to break to the downside, and you do not want to be long. So Shopify, what's very interesting is that last Thursday, we saw this official breakout to the downside out of this rising wedge, and we saw a nice retest on the daily 50 SMA, and so far we have held it. However, okay, come Friday of last week, we saw a bunch of tech stocks seeing a great run up thanks to the Meta earnings and Amazon earnings overnight, and we saw a bunch of tech stocks just absolutely rocketing higher to the upside, and Shopify did well and eventually allowed the price to retest the breakout level, which was this ascending support trend line, this old previous ascending support trend line, and has now turned it into a new level of ascending resistance trend line. Right, so it is an ascending resistance trend line. It had become, well, it was from an ascending support trend line, but it has now turned into a ascending resistance trend line. So for now, as long as the price continues to kind of stick right below this trend line, and obviously as it loses its volume from last week, from Thursday to Friday, it's gonna get interesting. And so if you are able to break below $80, we should be moving down. Okay, and this is something to really watch out for, because whenever I see these retests on the on any of these bearish chart patterns, especially an ascending channel or a rising wedge, we tend to see a really good follow through after that initial retest. Because again, what does a retest usually mean? Well, they're usually meant for more confirmation. And what was the initial breakout to the downside. So this may just be a confirmation for a longer term breakout to the downside, which would officially give us a bearish breakdown on a inherently bearish chart pattern. Okay. All right. Hey, Miner, you're welcome. You're welcome. You look to buy your. Hey, message me on Discord. Let me guide you through that. Just DM me personally on either Instagram or Discord, and I'll let you get that book, because it's really, really important that you get down those basics from the beginner's trading guide. I mean, it's a very comprehensive look to go back into the basics, especially if you guys have been struggling with the basics for some time now. All right. Okay, so that is it for tonight. Hopefully that was a very interesting and it's an overall comprehensive live stream. I've been live for about 50 minutes, almost an hour here, so 50 minutes of great technical analysis and applicable information. So make sure you guys are rewatching this live stream, because it'll be posted by default as a recording on my channel right after the live is finished. So make sure you guys watch at least 25 to 30 minutes of this live stream to really understand what I have said about what we can be expecting in the markets. All right. Okay, so make sure you guys really just give me a thumbs up down below if you guys really enjoyed this information. And most importantly, if you guys aren't subscribed yet, make sure you guys hit that subscribe button as well. But most importantly, hit that notification bell so that you guys are able to see when I have posted a new YouTube video on my channel, on this specific channel, Charts Focus 1 YouTube channel, or when I am live. But of course, you guys should know my live stream schedule by now. They are held on Tuesdays and Thursdays of every single trading week at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. All right, have a great rest of your night, and I'll see you guys on Thursday. Thank you so much for watching.